Traditionally, if you were to kind of do that on your own, like run calculations or to give that to your analyst, it's going to take at least a couple of hours, right? Whereas now you can run 5 to 10 of these hypotheses with an AI agent within just like 30 minutes to an hour.
In today's episode, we dive into the front office of hedge funds and asset managers as I talk to the CEO of an AI platform that helps with research, finance, and alpha generation. Hojun Choi, welcome to the pod.
Thank you for having me, Ian.
Excellent. Why don't we jump into a quick background on yourself, and then you could tell us more about your company, LinqAlpha, in terms of what they do, who they service, and what capabilities they offer.
Sure. So I started my career as an investment banker in Goldman Sachs, primarily financing fintech and proptech startups. And ever since then, I always thought about starting a startup myself. And when ChatGPT came into the market, it became very clear to me how much impact it would have on finance professionals in general. And so I teamed up with a group of PhDs from MIT to really start building this AI capability around handling unstructured and structured data sets. So we initially raised about $6.6 million in seed funding after outperforming NVIDIA, OpenAI, and Google on Hugging Face leaderboard for text retrieval. So that's like the industry benchmark for retrieval accuracy. And then ever since then, we've been serving various global investment managers and banks to help them navigate across different types of global markets problems, from public equities to credit, rates, FX, and commodities.
And what sort of core themes of problems are you helping solve for your client?
Yeah, so there are two core pillars. One is creating almost like a centralized intelligence layer. So as you can imagine, a lot of information that these finance professionals have to handle is very much scattered all over the place. Some clients receive 20,000 emails from different brokers to market newsletters, and then they sometimes have 3, 4 decades worth of internal notes and research. In addition to that, there's obviously constantly incoming market data set. And so usually, our clients swivel chair across 13 to 14 different applications. So what we do is we process every data set so that our AI agents are able to understand them effectively and would be able to synthesize them and deliver insights on behalf of our clients. So it's almost like having a pod of AI research associates who are able to support you all throughout the process. And the second component of that is for each of the AI agent that we design, they might have a special kind of capability, right? One might be more focused on crunching numbers, running statistical analysis, another one on social media analysis. And then you might have another agent that's more like a devil's advocate. And so having various agents to work together is what we call a multi-agent architecture. We were invited to NVIDIA GTC March of last year to present this concept where one agent only can do so much. Whereas if you have a multi-agent architecture, you're able to perform at a much better rate and overcome some of the internal kind of constraints of using an LLM.
Very fascinating concept, and it sort of speaks to orchestration agents. Did you design that yourself, as in you designed an agent that breaks it down and then delivers it out to multiple agents? Or how did you come up with the architecture to support that?
Yeah, the initial notion of a multi-agent architecture was proposed by the AI labs. But I think what's interesting is for each vertical, there might be a different specific architecture that might work best. And there's various decisions that you have to make, right? For instance, when do you decide when to split out the work across various sub-planners as opposed to having a central planner? Or how do you split the R&R of each and every workers that you have such that there's minimal duplication and they're able to work effectively together? And so the specifics of that multi-agent architecture really depends on the vertical that you're in. And we created our own proprietary architecture that works best for our global markets clients.
And then when it comes to the models underlying your agent platforms, are these your own? Are they one of the large language models, or is it open architecture? Clients can select whoever they want.
Yeah, it's an interesting question. I think back in 2023, a lot of firms tried out fine tuning some of the models. and then were proposing different ways of building their own model. I think at this point in the market, usually for any kind of state of the art reasoning models, you directly take what the AI labs have developed because they're just so sophisticated. But I think what's more important is when you look at the overall performance of an AI system, I would say model only accounts for 30-40% of the overall performance. There's more to that than just using the state of the art model, partly because the way that you ingest data, the way you create a finance specific ontology, i.e., extracting entities, mapping different relationships, and the way you design the multi agent architecture all determines how well the AI system is able to perform. So, to give you an analogy, it's like we're creating this Formula One car where obviously the horsepower, the engine is important, but the actual lap time is determined by the transmission, the steering, and the evaluation. And that is what we're trying to deliver, essentially a proprietary architecture that's specific to finance. So while we do take the AI models directly from the labs, that architecture is proprietary to us.
So you're very focused on a niche in terms of finance, and it's a big one there. What else sets you apart from other AI platforms out there?
Yeah, I think most AI players to date are way too focused on private markets. So the past 3 years, you've seen players like Hebbia, Rogo, Model ML. They've cumulatively raised more than $400 million in funding. And the private market, in fact, a different AI capability, it's more like an operational efficiency use case. Because when you think about it, they connect into virtual data rooms. They extract and parse from every single document from legal, accounting to finance. You might be looking for some kind of a clawback or an MFN clause to some kind of an ESG angle. And so it's like a document by document extraction. Whereas when you think about public markets, you have to continuously manage a compounding amount of or volume of knowledge. And that's all interconnected, right? So if someone asks, what's the impact of a distress scenario in China property markets on my equity portfolio, you need your AI agent to be able to search for, say, like notions relating to China credit rating, distressed property market, macro, central banking policy, and then connect it back to your equity tickers, the weightings to see the implications of such an impact. And that requires a totally different exercise. It's a different level of complexity. And we've been specializing in handling that type of complexity across assets and across different types of global markets scenarios. And so I'd say, in terms of the global markets, we're the leading player and one of the first to really focus on these type of complex ontology problems.
Just on the specifics of the technical side there, using the example you said, does the AI agent understand the question? It goes out and pulls the relevant data, pulls it into your platform, then it analyzes it? Or is it doing it like a normal chat GPT and it's just searching what it's trained on and it's just summarizing based on a predictive estimate of the most likely word?
Yeah. So there are clear constraints of just using a single LLM. What we actually do is starting from data ingestion, right? There's going to be a lot of unstructured text where you don't have the right tickers, you don't have the right identifiers or unit of analysis, whether it be G10 currency to yen dollar to Nvidia tick as a ticker, and we extract more than 100 metadata from those type of identifiers to analyst name, target price, sector, asset class, to make sure that the AI is able to navigate across large volumes of unstructured data, meaning HTMLs to PDFs to emails and whatnot. And that is usually very much adversarial when you're trying to run AI on top of these type of unstructured data sets. And so what matters more is being able to kind of ingest that data effectively because LLMs can't really comprehend them in their raw form. Another example is, there's going to be complex charts, graphs, and tables. When you use a plain vanilla LLM, it will likely, collapse some of the rows or columns. There might be certain issues around understanding complex charts. We also handle that such that, LLMs are able to digest it effectively. And then even when it's going through that reasoning process, as opposed to having one LLM to decide everything, once you have a multi-agent architecture to red team against a certain idea, to go back and forth, have skepticism by design, and to be able to go further into some of the reasoning capabilities, you're able to get a better result overall. And so it's not a single LLM, it's going to be a multitude of different LLMs with different capabilities and then making sure that we have all of the data normalized for the LLM to digest. is what we're doing in the back end.
Sounds very, very fascinating. And then what would you say would be some of your most popular agents?
Yep. So I think in terms of the agent use cases, we see three categories. One is the ability to monitor something. And that could be a time-based monitor, like a weekly, daily, monthly thing, or it could also be an alert-based trigger, right? Maybe some kind of price movement in the market, some kind of mention, some kind of an event, new filings, transcripts, Fed minutes, and all of these are potential areas where users need to monitor different kinds of movements. And sometimes there's 200 to 300 different instruments or stocks that they have to look out for, and so AI is able to aid with that. I think the second pillar is around synthesis and aggregation. So let's say, there's an earnings call, 10 different brokers sending you similar emails on what happened after the earnings. And you're really looking for the outlier, right? You're not going to read through each and every email where it states the same, because this is misfeed and the EPS and the management guidance and whatnot. And so being able to kind of synthesize all of that together to pull out what's more relevant for the user, I think is a second core use case. And then the third is more around prediction. So the ability to look at historical precedents and then to quantitatively analyze the current movement to come up with some kind of a probabilistic direction. And that doesn't have to be 100% correct, but as long as you're able to see the changing delta in the way that a certain asset price is moving, that provides good implication for the user. So those three core pillars are the primary kind of use cases, and the specifics of which might differ, right? For instance, with analysis or synthesis, it might be around generating a company initiation research, or it might be around analyzing social media comments, where there's a bunch of noise, but you can look for specific kind of signs that are not apparent in public filings or transcripts. And so we built over 30 different agents, and each of them would serve a different purpose, but primarily categorized into these three buckets that I just outlined.
Excellent. And 30 agents, and I assume that grows as client demand or market demands there. You add it, and then is it effectively in off the shelf, a little bit of configuration, and then it can be deployed to the client that elects it?
Yeah, that's right. And because we built our own AI native architecture around it, we're able to essentially build Lego blocks, right? And so when clients ask for it, we combine different Lego blocks together to serve the client with a bespoke tool, which from our end is actually quite scalable. So that's how we serve various demands from different clients that seem bespoke, but we're able to kind of scale the business that way.
And then in terms of ingesting data externally, would you be using APIs and MCP if you're connecting to other AI services as well?
Yes, I think having an MCP native architecture is becoming increasingly important. What's surprising though is last year when we met some of the even leading clients, they weren't as proactive in using an MCP native architecture. But I think there's definitely been a bigger push towards that direction ever since Cloud Code 4.5 came out. And since then, we've been helping clients to orchestrate and manage context as well, because you have all these information coming in with the use of MCP, and sometimes they're just not as optimal. And you have to make sure that the noise to signal ratio within your context window is optimal for the LLMs to perform effectively. And so we will support our clients to manage different types of MCPs as well.
Now, if we dive into one of those pillars, the research synthesizing agent pillar, when it comes to pulling in your example there with various different analysts, memos, and research, how do you avoid the risk of hallucination?
Yeah, that's a great question. So I think there is a number of ways to address hallucination. First of which is making sure that you don't force a text-based LLM to try to calculate numbers. I think the first 2 years after ChatGPT came out, because the coding agent's capability wasn't as powerful as it is now, many people try to make LLMs really crunch the numbers using a text-based model. And that just doesn't work well, or it's not designed to do that. Whereas now with the coding agents, you're able to seamlessly blend in structured data sets. I think one of the most promising use cases of that has been around quant analytics or portfolio construction. So as you know, a lot of discretionary investors aren't using as much of the quantitative capabilities as they could. And coding agent really bridges that gap. And it doesn't hallucinate in terms of the numbers. The numbers are actually hard coded into relational database. And the LLMs might make mistakes in pulling out the numbers as it codes Python or SQL. But once you optimize for the relevant type of context engineering, it's able to pull out that number and blend it in with your unstructured narrative, qualitative analysis to give a better result. And so using the coding agent at the right time and the right place is very important. Second component is just looking at the overall architecture. How do you define hallucination? How do you capture it, right? And I think that relates back to how well you evaluate the responses. I think having audit trails to the original ground truth is already an industry standard practice. So nowadays, whichever model you use, you can click the citation to see the original reference. But I think what's becoming increasingly more important is assessing the quality of response. And the way we evaluate them is we think there are two different buckets. One is the trivial queries. So they would be things like what was NVIDIA's revenue last year? So they have a ground truth. It's actually easy to evaluate them. You cross check them against fundamental data sets. But I think the trickier one is really more like the qualitative response, which we call non-trivial queries. So things like, are we in a market where there is GPU oversupply? And it's harder to answer because there's a lot of normative or subjective judgment that goes into it, and there might not be a single clear-cut answer. And so evaluating for that, it goes beyond just the realm of hallucination. It's almost like your English teacher grading your essays, right? And so having an evaluation criteria that goes beyond just industry benchmarks is important. And that I think different firms are trying to figure it out. We actually provide that as a service to our clients as well, where, once you want to have a better way of evaluating the reasoning models, you have to go beyond just handing the ground truths. You have to actually think about what's a structured response, what's a logical response that's persuasive enough for you to use as a research associate in your work environment.
To make sure I've understood the concept correctly, especially around the quantitative side, the AI understands the context. It understands it now needs to calculate, let's just say, the average of 6 analysts. It then engages a coding agent to then build Python or some sort of coding language that can then run the data. So it's deterministic, it's not probabilistic, to calculate it and then pull it back in to the response. Is that correct?
Yeah, that's right. So, you could do all sorts of interesting exercises. So, for instance, you could look at how many times the management of hyperscalers mentioned the term Gen AI, count that, and then compare that against capital expenditure, overlay it to see, the talk to action ratio, for instance. Or, you could run any kind of like regression, multivariate analysis, Bayesian statistics on top of those numbers and then tie it back to your qualitative narrative. And the orchestrator agent would be able to merge different responses. But what makes it especially powerful is the fact that the coding agents are able to execute on these quantitative analyses almost seamlessly.
One area that I've find interesting is, let's just say your platform's very powerful and the top 20 hedge funds are all using your platform. If everyone's using the same research agent or the same agent, how do you avoid what's the word here? Everyone kind of having the same output. And then you have herd mentality in terms of inputs, outputs, and actions.
Yeah, that's a great question. So the way we think about our AI system is we're not trying to create a quantitative model where it's exposed to alpha degeneration as more users use them. In fact, we make sure that every environment, every context, every infrastructure supports the analysts and PMs to have ways to essentially enhance their view, to challenge their view, and then to be able to move at a faster pace, at a deeper depth. So our mission actually is less about generating alpha. It's about eliminating all friction and connecting the dots to help investors really push the frontiers of contrarian thinking. And the way we do that is through a number of ways. For instance, a lot of users actually don't realize that even LLMs natively have biases. So last year, one of the papers that we published was "Your AI, Not Your View," where, certain models might prefer consumer cyclicals. Another model might be more momentum versus contrarian. And then, models each have their own size biases as well. And so, in fact, when you try to use a single LLM, you might find that actually you're exposed to these type of biases. And so what we do is we make sure that we use multiple models to be able to balance those views, but also to be able to kind of understand, where you're coming from and then have the models become skeptical by design. Because what we're not trying to build is a conformist. We're trying to make sure that LLMs are able to go help you go beyond where you used to be by yourself. And so it's almost like running a pod of research agents. And that said, what's going to increasingly happen, I think, is each investor will not be confined by the specific investment strategy or the asset class that he or she covers. I think increasingly agents will be able to give you a broader view. You'll see that the hurdle for learning new concepts will go lower and lower as intelligence, even in finance, becomes commoditized. And so there's going to be a lot of information that you're going to need to digest, and the ultimate judgment will come down to you. So ultimately, we don't think that we're going to be degenerating alpha by distributing our platform. It's almost like you'll have these superhuman capabilities, and you'll have to fight and compete with the market at a higher level than you used to because everyone's capability will get stronger over time.
And if we were to go out 2 or 3 years, would you envision that if you have a manager that's not using these AI agents or equivalent, they're just going to struggle to survive? Like it's a must have sort of thing.
Yeah, because once we achieve our mission, right, eliminating all friction, if you don't have LLMs or AI agents by your side, you're going to still face that traditional friction. And that could be, anything from, languages or, information access to pulling out implications. You're always going to be a step behind if you don't have those agents with you. And these agents will be crunching data on your behalf. It won't be you directly crunching data and running Excel models. Agents will be doing that at much larger scale and at a much faster pace. And so I think it's going to be absolutely essential for everyone to leverage these agents to make sure that they're staying on the top of their game.
If you're enjoying this podcast format and content, please visit my podcast website, www.thefundaipod.com. There, you can watch past episodes, submit a guest nomination form, and explore multiple ways to work with me. If your firm needs guidance with AI, you should contact my AI and automation consulting firm, Zentia. Zentia can help identify top AI use cases, build or co-build agentic solutions, train your staff, and implement a governance and oversight program. Visit www.zentia.io. That's ZENTIA.io. And if you were a new hedge fund or asset manager launching today, what would be 2 or 3 agents that you would recommend as a must have for day one for them to deploy?
Yeah, I think for newly starting funds, what matters more, I think, is the overall infrastructure. It's actually very, very hard to build powerful agents if your data is all scattered. Everyone uses a different platform to save down their nodes, and then nothing is, managed at the central level. And I think, even multi-strategy funds are thinking about ways to kind of navigate this issue because agents become exponentially more powerful as they have access to more data, whether it be market data, whether it be, unstructured data. And, it has to go cross asset. It has to go cross regional. And that, will allow you to really see beyond what you used to see with the traditional market intelligence platforms. And having that infrastructure that supports an agent's ability to access different data sets will be absolutely crucial, which is why I would say initially setting up the fund, making sure that you have that agent native architecture is going to make a huge difference. And as you see new models and new capabilities emerge, you'll be able to incorporate them faster and stay ahead of the curve. Whereas if you continue to use legacy systems, it's going to be harder and harder to stay ahead because they're not going to be as compatible with agent native architecture.
And then going the next step, we went from new manager. If you have an existing manager that wants to onboard with you, walk us through that due diligence, onboarding, implementation. And I'm coming at that from like you mentioned, they're going to have lots of different technologies, software, OMS, emails, Slack messages, local storage. Is the first step a data mapping, what they're using, where it's stored? And then do some clients have to change that before they come on board so that it is AI ready? Data is the foundational level of AI.
Yeah, that's a great question. So we try to first understand where the client is, as opposed to forcing them to migrate some of the data sets elsewhere. The baseline is ideally you want the data on the cloud so that we're able to handle and ingest and process them. But generally, it's a process of understanding which systems they use to pull out data sources, what kind of data sets they're using, the cloud storages, and where the information flows. How do they track their portfolio weightings, the risk exposures, and then we would design an agent native architecture where we try to connect directly into some of the storages to be able to pull out the information and to ingest them and to generate the relevant types of agents that the team requires. So initially, it would be that infrastructure setup, as you mentioned. After that, it's really about figuring the key use cases. I think every investment manager has a different investment style. Even within the fundamental space, everyone has a different way of defining fundamentals. And so what we try to figure out is, ways to kind of navigate that effectively. And it's a little tricky at first because I think generally the industry is at a place where everyone's looking for an answer, but they don't know what their question is. And so we have to share more references, more use cases to help them see what agents are able to achieve. And then once they have a certain level of base understanding of what agents can do, we can design something more bespoke for them where it aligns with their existing workflows. And again, we don't try to change the way that they work. We try to make sure that it blends in. And while they can continue the way they analyze things, agents are going to be able to enhance their views and to expedite their work process and to help them validate their hypothesis 5, 10x faster.
Okay, so shifting views a little bit here. I believe you have a partnership with Microsoft. If so, could you explain what the partnership is, why you did it, and what it enables for your firm?
Sure. In general, we've always taken enterprise grade security very seriously, and we've worked with all of the hyperscalers closely to make sure that we can connect with our clients' systems to be able to process and work on different types of deployment problems. And so, working with Microsoft, we're able to more closely connect with Azure and make sure that everything is encrypted and we're able to handle clients' data in a safe, secure environment. And beyond just public cloud, we also work on virtual private cloud deployments and also on premise, which is why beyond just working on the cloud, we try to understand the security and the infrastructure requirements that the client might have.
So, this podcast is about inspiring others to increase their AI adoption and doing that through stories and real life AI use cases. So, are you able to share a few examples where your clients have used your agents and share what some of the benefits they've gotten from that are?
Sure. On the productivity side, we built agents that, for instance, can attend meetings on your behalf, translate, transcribe, and summarize specific meeting notes, and to propose, next steps or items to analyze further. And this agent, without you even turning on the computer, is able to use its own virtual computer. So we use computer use agent for Anthropic, and this has been really powerful for clients covering different regions. For instance, 3M call in Japan, and the real time interpretation is so bad you didn't get it, but our agent is able to translate that even better. And it even supports Thai, Cantonese, different types of languages that you might need to understand to be able to analyze those markets. And it's a simple use case, but it's been a really powerful use case as well. Some clients have been using it more than 100 times a month, especially during busy seasons. Another example, I think, is more around leveraging alternative data sets. So, as you know, there is increasing retail activity that's impacting the public markets. So, we've worked with buy-side ECM desks, as well as some of the investors looking into pre-IPO or consumer names of publicly listed companies, where we would analyze social media to understand the positive and negative sentiments, and to also show you the verbatim codes and the qualitative commentaries. whether it be, Starbucks unionization to certain concerns around portion control risk at Chipotle. There's different types of analysis that you can perform to understand what the retail is thinking. And that I think has been another interesting use case. And just taking a step back, so it usually takes us 2 to 3 weeks to really understand and design the workflow that you're looking for. Sometimes it's more fundamental, other times it's technical or quantitative. And ultimately, it comes down to making sure that the agents not only deliver the form factor, i.e., the specific format of reporting, but also making sure that users can customize them. Even something as simple as an earnings summary, everyone has a different style, right? Some although coverage sector analysts might look for certain mentions of industry specific metrics, whereas for AI or software coverage analysts, they might look for more qualitative thematic developments. And so, as opposed to us designing something, I think the new normal is the agent should be able to design it, and you should be able to give feedback. So it's almost like having your own intern who will do better and better as you give more instructions. And the general kind of infrastructure around memory and context really supports that, so that you can have your own intern that grows alongside you as you go through your career.
So AI's moved very quickly over the last couple of years, and we see new capabilities, new features released every few months. If we were to look forward, or at least in your own development, what are you excited about 1, 2 years from now? Where do you think AI in terms of the front office can go?
Yeah, I think the core value of AI in the next 12 months will be about bridging that gap between discretionary and systematic investors. I think there were a lot of conversations around, having quantum mental methodologies, but in reality, there was still a very big divide. I mean, you might use certain quantitative criteria to screen for stocks and then go into your qualitative or fundamental analysis, but it wasn't like a seamless blend of the two different worlds of investing. Whereas now, the coding agent and the LLM architecture allows you to bridge that gap, and I think that's going to unleash a whole new capability that you're able to leverage in investing. The analogy that I would use is, like when you're driving a car, right? Traditionally, there was stick and then there's auto now. A lot of the, I think, discretionary investors are not using ADAS, for instance, to help them aid the driving process, right? And there's phenomenal technology out there that's able to help you understand, these quantitative risks, fully construction and whatnot when you're making these decisions. And it goes beyond just, the risk side. It's also about cross asset. So, how will Japanese election impact the rates and then yen dollar that might impact your equity portfolio, for instance. And so pulling out these implications, connecting the dots, I think is the really exciting kind of component of using the AI agents. And so each and every investor will become more and more capable as they leverage these AI systems.
Now, moving into AI adoption and kind of tapping into your sales experience when you're out there demoing this to prospects, managers, hedge funds, etc. How would you categorize the different reactions in terms of using these tools, especially as you talk to senior tenured analysts, PMs, etc.? Give us a flavor of the reactions and the excitement and lack of excitement to embrace these tools.
Yeah, having spoken to more than I think 500 PMs and analysts over the past 2 years, I can say there's two extremes. One is more like an AI skeptic. So he or she might say, I'm a contrarian investor. If I use or rely on any technology, that doesn't make me a contrarian anymore. And so I'm gonna, study and analyze a stock without almost any internet even, and will really deep dive into the thinking process that's proprietary. And then on the other side of the spectrum, there's the AI visionary. When you talk to them about productivity use cases, they will be disappointed, right? Is that all AI can do? I can just hire an RA to work on this. You have to bring to me something more, more exceptional, right? And that goes more into the realm of things like devil's advocate or almost like a thinking partner. They expect AI to perform at that level where it's able to synthesize all this information, and given its level of intelligence today, it should be able to give some novel views of how to think about the markets. And I think in between are most of the other organizations, and it becomes really an active change management. We've seen different types of management styles to really expedite the AI adoption process. In some organizations, we've even seen cases where they have leaderboards, different users using different AI tools. And so you're literally able to see, the person next to you, how much he or she is using these AI tools. And that creates some kind of a competitive spirit. In other occasions, it's really hands off. You're just giving them Microsoft Office and Copilot, and then letting them use whatever they can. And if there's not enough training, people will be like, "Oh, but like I tried this, it doesn't work. I knew it wouldn't work. AI doesn't work anyway." And so, without actual training and a structured process, I think the level of AI adoption can vary a lot. And we even see this across investment banks. Some of the banks where they've been more aggressive around AI adoption, when you talk to the investment banking analysts, they think about using AI for any kind of Excel formulas, as opposed to spending 5-10 minutes thinking about how to pull out a specific cell from an Excel spreadsheet with index match and VLOOKUP. Why not just throw that to an AI agent, right? Even our analyst, when he's running, say like the cohort analysis, nowadays, Cloud Code can do this really effectively and at a much faster pace. And so the way you think about solving a problem fundamentally changes when you know how to use AI. And that doesn't come naturally, which is why, based on the level of understanding of the client, we also try to, essentially help them go through that change management, because otherwise it's really hard to bridge that gap between an AI skeptic and an AI visionary.
And I'd love to double click into the AI skeptic using that example you had, because AI can still solve their obstacles and still allow them to have their own methodology. So, how would you reply when you pitch to a AI skeptic and they say they want to do it their own way, hence the contrarian?
Yeah. I think much of it comes from the idea that, first of all AIs think alike, and they're almost like a quant model giving the same answer. And secondly, they think that AI can help you summarize and scale your process, so it's a volume game, not a quality game. And the way we think about AI is actually completely different. We understand that investors are not running ice cream businesses. It has to be idiosyncratic and unique. And what AI can do is to help you validate your hypothesis much faster, right? Imagine a scenario where, for instance, like interest rates coming down, and then you want to understand, the potential implications of that to the specific sectors or exposures that you have. Now, traditionally, if you were to kind of do that on your own, like run calculations or to give that to your analyst, it's going to take at least a couple of hours, right? Whereas now you can run 5 to 10 of these hypotheses with an AI agent within just like 30 minutes to an hour, right? So the level of depth that you can get to by leveraging these agents to validate, broader universe of hypotheses is totally different. And so I think you have to intentionally think about ways to deepen your analysis, as opposed to just thinking of AI agents as a summarizer or an aggregator. And that, is still, I think, largely dependent on how well the users are able to use AI to their advantage.
As you look at the front office users, they have different tools that they may be using. How is your platform deployed and leveraged by the users?
So there's a number of things that we do initially to seamlessly blend into their environment. We do have connectors to all of their Microsoft Office related tools, so that we can connect into the Outlook, SharePoint, OneNote, OneDrive, and whatnot, to tag all of the relevant investment tickers, identifiers, and to make sure that AI is able to search across all of them. So you can ask questions like, why did we short Adobe last quarter? What was our thesis? How did it compare to market consensus? All of that would be handled effectively and across a longer time horizon as well. And you don't have to change your process, because essentially we're tapping into what you're already using day to day. And then the second component, I think, is around gathering market data. I do think, there's a lot of thoughts going around in terms of optimizing the unit economics of leveraging data sets. Because when you think about tools like Bloomberg, for instance, it's like you're buying a ticket to a buffet. but you're barely eating most of the things that they're offering, right? Especially for a lot of the discretionary investors, you're probably using only 10 to 20% of the overall data universe or the statistical tools that Bloomberg is offering, but you're paying a lot of money for that. And, we talk about ways to kind of bring in data sets a la carte so that, we're able to optimize for that cost and still be able to run the same level of analysis that you're doing. And that's possible, especially for discretionary investors, because most of the data sets like fundamentals, estimates, share price, ownership, they're not unique, right? And so you don't want to be overpaying for them. So aside from the existing tools that they're using for the existing data sets, we think about better ways to incorporate them into an AI system. And that matters a lot initially when we're running the pilot because they have limited budget. They know it's going to be a double spend, and yet they still do need to experiment. And so we think of ways to kind of make sure that the initial pilot isn't too expensive and that they're able to use it alongside the existing tools and then figure out, what's a better way to incorporate it into their workflow mid to long term.
And in terms of your client base, you obviously mentioned public markets. Are there any other requirements, minimum size, certain strategies that are a fit for your platform?
We did initially start with more of the single managers, long short equity, but since then we've expanded considerably to broader universe of investors from multi-strats, macro to even multi-asset investors. And so I'd say generally any investor in the public markets we would try to kind of work with to design something specific to them. And I think this is a pretty unique value proposition because even for some of the tools that are targeting public markets, they're still very much focused on a single asset class at a time. And I think that just doesn't make sense because everything is interlinked. You have to know one to really know the other. And so we do try to kind of link every dots together so that we're able to roll out these capabilities, whether you're a new launch, whether you're a large investor. The way we work with them might be slightly different. So we have two ways of delivering the product. One is the LinqAlpha terminal, which is really for smaller investment managers that don't have a core engineering team. So as opposed to setting up a front end, we'll deliver the web-based SaaS product. All you need to do is log in, and that's going to be really easy to use. You can essentially just have internet and be able to use it. The other way that we work together is rather than working with the investment teams directly, we become partners to core engineering teams at large investment managers like Fidelity and whatnot. And so we would build a proprietary agent together, help them roll that out 5, 10x faster. And they could be serving, 200 global PMs and analysts with their proprietary tool that's powered by us partly. So the IP remains with the client. They're able to own everything that's being generated out of the model, but they're able to, leave out the low ROI task to us so that they can focus on something that matters more. And I think that's an increasingly popular trend with a lot of the larger investment managers. Because once you buy an external market intelligence tool, the problem with that is you don't have full control over the way that you handle data. You don't have full understanding of how the agent is architected. Whereas when you work with us, we try to integrate everything and make sure that the team understands how we work together and so everything is proprietary and you don't have specific dependencies on us so that you're able to maintain it mid to long term as well.
Well, look, I appreciate your time so far. I'm going to leave with two last questions. The first one is, if you were to give one takeaway from this episode, what would be your key message?
My key message would be that AI is really moving beyond the experimentation phase. And it's really now up to the clients to decide how much of the AI agents would be able to kind of impact and enhance your workflows. And there is, phenomenal ways in which some of the investors are leveraging this technology. And so, it's very important to participate in that thought leadership and that thought community to make sure that you're understanding the current market trends because even now every month there's a new development within AI, a community that's really going to impact the way that the investment analysts and portfolio managers are going to be working towards the future. And so staying ahead of that curve by participating in that discussion, I think is going to be the key takeaway that I would love to deliver to the listeners.
Great message. And then the last one is if people are interested in learning more about yourself, LinqAlpha, what are your LinkedIn pages and what is your website for the product?
Sure. You can find our LinkedIn page on LinqAlpha and of course myself as well, where we usually share client case studies. And we've already shared case studies for various client persona from multi-strats to long onlys to family offices. So you'll be able to see how we're working together with different clients. And of course, our link off a blog also has more technical posts as well in terms of how we make sure we balance out different biases within LLMs, how we make sure that hallucination is under control and whatnot. And we also constantly publish and co-author papers too. In fact, in a few weeks, we'll be publishing a paper that's co-authored with the research team at Kashi. So I think prediction markets is another interesting field that investors will be interested in. So you can keep in touch with us through those channels to understand what we're publishing every week and every month.
Excellent. I really appreciate your time today. It sounds like a fascinating platform. I really like the theme that everyone needs to be using these. It'll become the new normal. And if you're not using it, you'll be left behind. So thank you very much for coming on the podcast and sharing about your platform as well.
Thank you so much, Ian.